Shares of Dow component Nike under pressure this morning. The sneaker and apparel maker reported its first miss in terms of what analysts were expecting. It's been 3 years for that. I don't know. Is that the analyst's fault or the company's fault? The company should have told them more. The company reported profits of 66 cents a share. That was just a penny shy. Joining us now to talk about Nike, Kevin McCarthy, Neuberger Berman, managing director. And Kevin, future orders, there's been so many ways to parse Nike's results over the years. I think this might be probably a pretty effective way, and that's gross margins, because a lot of it has to do with cost control and their whole business model. What do you think really happened here? They did mention Forex, but what's the real issue?
Good morning, Joe, Melissa. It's good to see you. I think first, as we look at gross margins are certainly a very big piece of this story. And as you look at the near-term scorecard, I think it's fair to characterize both earnings and the outlook as decent. But if we take a step back, certainly less theatric than the buildup. As Stephanie mentioned earlier on the call, China has been doing well. DTC channel drove decent upside on revenue. But to your point about margins, elevated costs from inflation and then also promotional clearance, which should be one-time in nature, drove a slight miss on profits. And then the guidance contemplates some of this temporary cost inflation continues into fiscal 24. And that's why you've got the stock bidding down 3 to 4%. But then second, as it relates to maybe the longer term scorecard, I don't think either of these points are really going to be thesis changing. In fact, on the margin, I'd argue it might be a touch better. So in a day like this, where you might have a good buying opportunity on a quiet day like this.
The cost increases that they see, are they able to pass those along to people, or is it inelastic, or where people just, or is it elastic? Will they just go and buy? Is the competition ready to take up the slack if Nike raises prices, or do people got to have Nike?
Okay, so it's a great point, and you're getting to, I think, what long-term shareholders care about. They care about competition. They care about, is the industry getting better or worse, and is Nike being more or less effective with capturing this share? And I think it's fair to say that, industry growth is slowing. Put China aside for a second. However, over the next couple of years, or the next few years, there are a few points that I think are, the silver lining in this, if you will. And the first is that Nike now has the industry-leading inventory position. They went from being up 16% last quarter to flat this quarter. And then on a unit basis, they're actually down double digits. And this is across both US and China. So this puts the company in a great position to be able to capture upside when and if we see an uptick in retail demand. And then as far as you mentioned on the competition front, right now we've got great competition coming from smaller footwear manufacturers like On and Hoka. And they're great because they're driving innovation, and innovation drives pricing power. And that's what we like to see. However, you do have another large footwear competitor that is dumping some of what we all know is a little bit a discontinued product on the market right now. That's unhealthy. So to the extent that competitors can clean up their inventory situations, this should be a benefit to Nike. And then lastly, I would mention that as we're talking about the silver lining here, on the margin side, the way management guided for fiscal 24 was for a operational improvement of 200 basis points. As you recall, this company was really taken to the woodshed with freight and margins. So there's still probably about 200 basis points of margin opportunity still left unmodeled in fiscal 25. So as a long-term shareholder, I'd include us in that. We look at these things as validation proof points that Nike is still extremely relevant for a fund like ours, like NBCC, which focuses on the millennial generation, where this brand is incredibly relevant.
So sorry, you're not Victor. but I want to
Not
talk
today.
about Victor, Kevin, because do you have any insight in does Victor Wembanyama, which is hard to say, he had a deal when he was in France with Nike. Does it carry into the NBA? And do you know how big it's going to be? I hear it could be a blank check. Or you want to talk about the size of the deal or the size of the actual sneaker he wears? Do you know what size he wears? 20 and a half.
What? They make that?
He's got like a 9-foot. He's got like a 9-foot wingspan, doesn't he? And he's going to be a phenom. He is a phenom. So Nike and Nike's already there, which is what they do.
No, that's exactly right. They are the ones that move in with the athletes. They're able to provide young consumers with an avenue, a channel that is obviously very inspirational in their kind of key formation years, so that they pass that along to their families as they grow forward. So yes, Nike continues to lean in, whether it's football, basketball, all sports, women, all of these verticals. Nike is leaning in. I think part of the story of Nike that gets underappreciated is how they continue to reinvent themselves and innovate and continually being fluid and adapting with innovation. So when I look at a situation like today, there's a lot of drama coming into the print today. And a lot of that was just really, actually, it was pretty well telegraphed by the company that they want to put themselves in a position to be nimble and flexible and capture demand as it unfolds.